Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, May 26th, 2009. Well, we're seeing a nice solid rally on Wall Street today, folks, led by really the financials and technology. An upgrade on Apple got things started early, some coinciding with some financial rallies in Goldman Sachs and JP Morgan, really rocketing this market higher. And you're seeing the Dow is up over 200 points, about 2.5% higher. The Nasdaq higher by 57 right now, and the S&P 500 up 23 points on the day, or 2.5%. Really anywhere between 2.5 and 3.25% on the Nasdaq right now higher. Now the crazy thing about what's going on now, and you're looking at this chart right now, was the big catalyst on an economics front was the consumer confidence number today. The consumer confidence number really got things started. You had a little bit of a bid in the market early, and I want to talk to you a little bit about what's going on. Now, first of all, we all know Friday was Friday was the lightest volume day of the year. We know that the day before a holiday weekend and the day after are notoriously major light volume days, really rivaling the lightest of the year throughout the year. Now, we saw that on Friday. Today, we're seeing a mixed bag, meaning that right now it's extremely light volume. It's been so ever since really 10 o'clock, 10:30. But you had a little surge in volume, which was actually a solid move on volume this morning on that consumer confidence number. Now, the consumer confidence number came out very, very positive. Now, to me, at us here at In The Money Stocks, not really surprising, but the market's taking it as a very positive nod, using the light volume to really rocket this market higher. Now, why is it not surprising to us? Because anytime you have a market that goes up 35%, in a matter of 2 months, of course you're going to have a rebound in consumer confidence. All right, everyone's 401k, everyone's IRA, everyone's retirement plans and investment accounts are all doing so much better. You're going to have a general move up in consumer confidence. No brainer there. Now, having said that, obviously the market's taking it as a positive, and you're seeing a very, very big move. Look at this move today. The market's actually gapped lower this morning, even though Apple's really leading technology here, up $7.50. But the market's gapped lower and then just started to rise. And you rose 1, 2, 3. Consumer confidence came out at 10 o'clock, and you had a mega spike followed by a minor little continuation move. And look at all these resistance levels that were just knocked out. They were just blown through. And when you have a surge like that, notice the volume upticking right there at 10 o'clock. Big volume surge. Look at the rest of the day. No volume in this market the rest of the day down here. And that's why you're allowing this market to float sideways to higher. One of our key adages, folks, when we talk about how the market works, is that when you have light volume, the market will generally hold sideways to higher. And look at this. Ever since the volume died down, which is right up here, you've kind of just gone sideways and floated up. Now, you're coming into some resistance levels up here. We're going to talk a little bit about that. But for the most part, what I want to talk to you a little bit first about is the volume obviously surging and the key resistance levels that were just blown through. Notice this, all right? Now, this is a major, major level on this market. Notice how you gap down right on top of the support line. Happens to coincide with the lows from last Thursday. This is a major, major level in this market, and every time we go down there, they seem to rally us off. Last Thursday, we hit it, rallied into the close. Right over here, we came down on Friday, gapped down on Tuesday this morning, and right away, the market gets a bid and it rallies off. So this is telling us this is a major level on the downside. 88.50, 88.25, right in that range is an extremely important point in this market. And should we ever come back down there at some point, you got to watch that very, very closely. Now, right away, just look at the surge in this market. I have not seen a surge in this market like this with such a big move up on so many candles in a long, long time. This 2, 4, 5 bar surge, really amazing to look at as the market gapped down to 88. Really, the low today was 88.32. Now trading at 91.32. That's a $3 move on the spiders. Most of that coming in this one move up in about 40 minutes or so. 40, 50 minutes. So a very, very impressive move. The market right now seems to be getting a little tired. There's a major level right up here, and I'll show you where I get it from. We'll go track this blue line. Let's go back and see. All right. Now, what you're seeing here, folks, see this lower pivot right here on the 20th of May, this lower close right here, these pivot lows, see how you kind of bounce down just above this level? This is telling you right in here, anywhere in here is a major, major resistance level on this market on the upside. And you can tell that because of all the pivot bounces. Remember, support right in here, right anywhere in between these two lines is obviously resistance in current times because we were below that. Just like here, you're hitting it, bouncing, hitting it, bouncing, hitting it, bouncing, bouncing all the way up, bouncing again here. It's kind of almost like a trampoline. Bounce, 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 bounce. A ball or some sort on a ground. Once you break that down and go below it, like you do right here, when you go back and test this level, you're going to see there's going to be resistance there, and that is what we're coming into. Notice this right here. You're starting to see a little bit of tailing. Tails often signal a little bit of a topping pattern possibly in place, and we'll see. Now, the one little thing that you have to remember in this market is that going into the end of the day today, volume will remain light for the most part. You may have a surge from 3 o'clock to 4 o'clock. We'll see how this market reacts then. But for the most part, this market is being led by Apple, by Goldman, by various financials. JP Morgan is so strong today. Look at this surge on JP Morgan. Gap's lower today and is now up $1.78 on a $36 stock. That's a big move. Goldman Sachs having a good day, up $4.50. Was weak early, rebounded, pause, rebound. This is a bullish pattern. You should all know this pattern by now. This is the type of stuff, pattern, price, and time. This is what we really get into hardcore in the Nightly Research Center videos. We do encourage you to come join us in the Research Center. It has a lot of different things. All right, so notice the pattern. That's a bullish pattern. We call this out in the chat room. Right away, up to the move. Look at that, right up. Got to know your patterns, folks. Patterns are key. Apple Computer, probably the biggest mover today on the technology side, up $7.50 after an upgrade with a much, much higher price target by Morgan Stanley today. And that gave the whole tech sector a lift. Almost immediately on the open, the NASDAQ went from negative to positive and really continued to move up for the last, I don't know, God knows what. But this NASDAQ has just been a monstrous move today, up 54 points. Now, again, the light volume thing is a big concern. You have to be a little cautious here in the light volume afternoon. That could keep this market in a faulty move. And we'll see tomorrow and on Thursday and Friday when we get volume back in this market in the next week or so, whether or not this rally holds. I am a little cautious. All right, there are some signs out there that I'm not quite sold on yet, but right now you have to respect the move on light volume, and we'll have to continue to watch this market into the remaining portion of the day. Okay, so a couple other things. I want to go back to the spiders chart, and I want to show you some resistance. And notice a little bit of resistance getting hit right in here. I showed you exactly where that line came from, and this is why it's so important to understand technical trendline analysis, price pattern, and time. Because you have the trampoline effect working on the upside, then you break down, and it becomes a kind of a ceiling to the market as you trade down here. All right, and again, as I showed you just before, when you break below it and you go back up, you're hitting right into resistance right here. So there's a good resistance line the markets will see. If it breaks through that, we'll go to the 60-minute chart and show you where it would go next. Okay, next up, what we're seeing now is you can see what happened. And look at this beautiful chart. These charts just blow me away how accurate they are. Alright, so you know I showed you this bottom, right? I showed you this bottom from last Thursday. Then we touched it today on the gap down. If you go back, look at this. 1, 2 more hits prior to that. That is amazing. Think about that support line that must be there. And I have a line drawn on my 60-minute chart right there. Now, taking that into account, if you want to know why there's so much support there right now, currently, after it's been hit so many times, look at the 200 moving average. Here's the 200 moving average sloping up. What does it come into? Right there. Where does the market open? Right there. Boom. Off to the races. Look at this 60-minute candle. I have not seen a 60-minute candle like that in a long, long time, folks. That is really unbelievable. Look at the size of that, and then look at the consequence moves up here. All right, right here, where does that 60-minute candle end? Right at gap fill. Right from here. So these are all levels you got to understand. Understand your charts. You read your charts. You don't need technicals. You don't need fundamentals. When I say technicals, I mean like the nonsense of RSI, stochastic, MACD, all that nonsense. You just read the charts and they will tell you. You don't even need that nonsense. And that's what we really try to teach. And we really can simplify it to the point where you don't have to get bogged down. You don't have to use what everyone else uses. Because when you use what everyone else uses, it will fail. Alright, more often than not, it will end up failing. And many people with the stochastic say, well, it's oversold. I don't understand why it's not bouncing. Well, there's more to it than that. Stochastics, RSI, MACD, they all can remain, and the rest of them, all those things, can remain oversold or overbought for long periods of time, getting people into trouble. But when you have levels to watch, you can even use those as a supplementary thing and really coincide it all with key levels. So, very, very interesting to watch, folks. Again, you can see here, if we do break this, and I want to show you this again, see this level right here, right around 91.25, which is resistance right now, right in this area. If we break that to the upside, you're going to look in the afternoon session for this level right up here, 91.65 to 91.75. Right in this area would be good resistance. Then after that, you have these sloping blue lines that are going to be major, major levels to watch. And we'll talk more about those in the nightly video. Those are big, big levels we'll have to talk about in a little more in depth and do some more analysis in this evening's video. But in any case, folks, you have to tip your cap to the market. Solid day, no doubt about it. Got to respect it on light volume, on holiday hangover volume. Have a wonderful day. Come join the Research Center, the chat room, our next webinar in early June. It will be awesome. Take care.